Hi, Troy Boisjoli, CEO of ATHA Energy. ATHA Energy is an exploration and development company focused on uranium exploration across Canada's three best uranium jurisdictions.
Troy, thank you so much for joining us. First off, about our spoken, we did manage to have a little chat before we kicked off here. But for everyone else, why don't you start and give us a little bit of background on yourself?
Yeah, I'm Troy. So background on myself, I'm a geologist. Came up through the uranium space in Saskatchewan. Came up through Cameco Corporation, exploration geologist. Transitioned over to operations. At that point in time, Cameco was operating two uranium mines in the basin. I had the opportunity to be the chief geologist at one of them at Eagle Point. From that point, I had the chance to move over and join NextGen Energy in the development of the Rook 1 project. There as the Vice President of Project Development, Operations, Exploration, and Community on what is a world-class uranium project in the Athabasca Basin.
Right, and we are going to talk about a second about 92 Energy, Latitude, I'm sure ISO, NextGen, etc. But it's always important for us to try and understand, what the big plan is here. So what, you obviously listed, over a year ago now?
Just under, April 11th, yeah.
April, okay. So, but what was the big idea then, and has that changed any?
Yeah, the big idea then was, hey, ATHA is a company that had a dominant land position in the Athabasca Basin. So over the course of about 10 years, two of probably some of the most successful generative stage individuals in the Athabasca Basin put together an extremely large land package, 3.4 million acres. Got together with a very strong capital markets team and raised, up to that point in time, at the point of listing, raised over $42 million in support of that land package, with the idea and the thesis of exploring at scale in what our view is the best uranium jurisdiction in the world. And so that got us up to the point of ATHA of listing. And then, from that point in time, ultimately, ATHA is a platform that represents a growth platform in the uranium space. And that growth, Matt, was, intended to come in three ways. One was through investing in our very large exploration package in the Athabasca Basin. The second kind of platform there was and is exposure to NextGen Energy and ISO Energy's exploration programs through a 10% carried interest. And then getting to the crux of your question, the third one was looking at M&A opportunities and acquisition opportunities in the uranium space and growing through acquisition.
Well, you see, this is the thing that interests me is in terms of, we've seen a few different business models in terms of the consolidation play or the M&A play over the past, I guess, 3 years actually in the space. You've kind of surrounded the Athabasca Basin with your properties. 3.4 million acres is a lot of land. It's also a lot of liability, right? In the sense that you've got to do something with this stuff. And so, what are your thoughts around how does this get financed? You raised $42 million, and obviously with the merger of the other, like Energy and Latitude, you've got opportunities to raise a little bit more, but you'll burn through that in terms unless you're very careful. So, what's the kind of What's the idea in terms of how you keep this thing financed, ongoing?
Well, that's part of the strength of ATHA. Okay, and when you look at what we were able to do in early December with the announcements of the two proposed acquisitions, 92 Energy and Latitude Uranium, we also did a concurrent raise, and on a pro forma basis, we're looking at a balance sheet of around $65 million. Okay, but to your point. It's interesting. You think of exploration property, both in terms of assets and then liability. They're two sides to the same coin. And I would say that 5 years ago, 6 years ago in a uranium market like that, this would have been a very difficult strategy to be able to execute on. Where we're at right now, is we've invested heavily in maturing our assets, maturing our exploration assets. That's, what we did in 2023 is we kicked off and executed the largest ever multi-platform EM survey across the Athabasca Basin. And the strategy there was two-pronged, okay? First part of the strategy is, one, it's geared towards target generation, generating a significantly large portfolio of exploration targets across the Athabasca Basin, across this land position. Then in turn, that also provides us an opportunity to be selective in the projects that we're going to work ourselves, and then also provides opportunities for others to that are looking for entry points into the Athabasca Basin, into the uranium space, to participate in this market. So it's a two-pronged strategy, two-pronged approach as it relates to our early stage generative exploration projects.
Okay, you've done that sort of largest in the Athabasca Basin, but targets and anomalies don't necessarily have not recently equated to value attribution by the markets. Now, uranium price in terms of spot price certainly, and probably following quickly behind will be contract price will help. But as effectively a explorer, that's because I'm not seeing too many development projects and no production or some near-term production projects either. Is that right? You're going to be an explorer, pure play?
Yeah, we are an explorer, and you look at our profile on a pro forma basis. Okay, you look at ATHA's profile on a pro forma basis, and adding in the Latitude uranium assets and primarily Angulac, and then as well the 92 Energy assets. Okay, and I'll maybe take a step back and walk you through our assessment criteria that got us to the point of reaching out and making the proposed acquisitions. Okay, so you think about our profile, large scale explorer, built and structured to explore at scale. The dominantly early stage exploration projects and generative stage exploration projects, which in my mind, as a technical guy, represent some of the largest opportunities in exploration, is to explore on early stage ground and be the first pass explorers on that ground. Okay, but having said that, evaluation criteria, looking for opportunities to mature ourselves along an exploration risk curve. Okay, so fundamentally looking at opportunities to acquire resource stage projects, i.e. Angulac, LUR, and post-discovery stage projects, i.e. 92 Energy and the GMZ zone. Okay, so you look at the profile that we have now, and we have the largest by far. We have over 7 million acres on a pro forma basis of exploration property across 3 jurisdictions across Canada. We have post-discovery projects, and that is, predominantly the GMZ project with significant upside potential in my perspective. And then we also are backstopped then by Angulac, which is a 43.3 million pound historic resource at an average grade of 0.69%, which is one of the highest grade resources outside of the Athabasca Basin. And so investing, exploring along the entirety of that exploration risk curve, which in our view then represents the highest exploration exposure in terms of one company across the entirety of the sector.
Right, but what have you got to do? Is it literally that the cash will set these projects free? Because if I look at Latitude, Angulac, I say 43 million pounds, right? Picked up from Valor Discovery Group. It was not getting the value. It was getting attributed 12, 14 million bucks of value. They'd raised 5 million just before you announced the deal. But is it purely your money that's going to set this thing free? Is it the market that's going to set that thing free? And so in terms of you being able to get more value for exactly the same asset, which people were valuing at quite a low figure, just in Latitude's case.
Yeah, Matt, I believe it's a combination of all three. Both of the things that you mentioned, as well as a view on the technical aspects of the project and the expandability. So one of the key criteria that we were looking at was not only what I've went through in the past and looking for post-discovery and resource base, but also a significant amount of upside and asymmetry within those projects. And I'll explain how we see that at Angulac. So Angulac, the LAC 50 deposit, the maiden resource came out on that project. It was 14 million pounds. 1 year of drilling, that resource increase in size and scale to 27 million pounds, that historic resource. Another year of drilling, 43.3 million pounds. Okay. And that's in addition to the targets that we see both in terms of within the footprint of that zone of mineralization, that deposit itself. And so when you look at the combination of having it in the hands of a company that is very well financed, that has the ability to systematically and progressively move that forward and expand that resource in a uranium market that we're merging into and seeing, and all three of those things, I think, equate to the ability to re-rate the valuation of that project, and move it forward while we are seeking to materially expand that resource.
Right. Okay. And obviously, we better talk about ATHA Energy, Sean Lancaster's company, and Gemini. There, are you seeing exactly the same opportunity there?
Exactly.
Yeah.
Exactly. Okay. So I spent a significant amount of time exploring in the basin, particularly on the Rabbit Lake trend, and that's right from Rabbit Lake through to the Collins Bay deposits in Eagle Point. Okay, and what struck me when I toured site, when I saw the core, when I walked through the core, are the similarities between the GMZ zone and the Rabbit Lake deposit and the Rabbit Lake trend. Okay, both in terms of style of alteration, mineralization, geology, lithology, etc. And what we see there is the opportunity to continue to expand the GMZ zone, which Siobhan and the 92 Energy team have done a great job in discovering and defining, expand that zone of mineralization, but also explore along that trend. There are very few basement hosted, uranium trends in the Athabasca Basin, particularly along the edge of the basin. The two that stick out to me are two that I have a lot of experience in. That's the Rabbit Lake trend, and that's the Patterson Lake corridor. And our view technically is that the GMZ corridor is very similar with multiple characteristics, multiple attributes to the Rabbit Lake corridor, and so that's the opportunity that we see there, Matt.
Okay, interesting. And this is the other thing that's kind of happens when kind of we'll call you superstars, when Super X Cameco team kind of get together, superstars when they sorry, see. But when you kind of start something up, people get excited. They perhaps run ahead of themselves. Expectations are high. You've been able to raise capital in the market. That's all kind of good news, and that's kind of based on reputation before you've done anything. You seem to be talking the language of people who want to do something. You're not playing the market. You actually want to do something here. So, what do you going to point people to that's important for you and your strategy that they should value? Yeah, maybe more than some of the other things, such as hype and superbly.
Yeah, 100%. What we intend to do real things in this market, and I guess you backstop that with, I believe this is the best. We talked about this a bit before we started. I think this is the best uranium market, certainly that I've ever seen. Okay, and so the time to invest and advance in across an exploration risk spectrum and across an exploration risk curve it's a great time. It's a great time to be doing that. It's a great time to be expanding resources. It's a great time to be doing advanced exploration along a post-discovery corridor. But then at the same time, it's also, the timing, I believe, is right to continue to build up a really large platform and portfolio of greenfields exploration targets that have the potential for material discovery. And so, over the next 12 months, that's going to be our focus. Our focus is going to be on expanding Angulac, expanding mineralization there, and expanding that historic resource. It's going to be investing in GMZ. It's going to be drilling along that corridor. And thirdly, it's going to be continuing to invest in our portfolio and our pipeline of greenfields targets with the objective of defining tier one targets within the largest land positions within the best uranium jurisdictions in the world and testing those targets. And historically, what that leads to is material discoveries, Matt. You look at the history of the basin from, Key Lake through to Rabbit Lake, and the exploration at scale that happened there in the 70s through the 80s led to material discoveries. More recently, the Patterson Lake corridor. First one's in there, Alpha, followed by Next Gen, Fission, etc. That's part of the basin where no one historically viewed as being highly potential for uranium mineralization, and there's nearly 500 million pounds on the books there. And so it's a multi-pronged exploration approach in the near term, but continuing to look to add value through the strategy that I talked about on the onset. That's investing in our exploration assets. That's exposure to NextGen's exploration program through a carried interest. And we remain focused on looking at the industry opportunistically. And if we see value accretive opportunities, we'll continue to pursue those.
Right. And when you look at some of the other consolidation plays in the sector, which is a very small space, a very, very small space within the natural resources sector, right? It's tiny. Uranium is tiny within mining. let alone kind of globally in terms of investors looking in at this thing. There's been a bit of M&A over the last 2-3 years. When you look at some of the models deployed there or employed there, I hope it all works. We need all the uranium we can get, so it's all good. So I'm not going to point fingers at anyone, but do you think there are models out there that perhaps are going to wane, or there's going to need to be more M&A to kind of keep the kind of interest in those companies, or in maybe even the sector more broadly, because it does need scale, versus your model, which is right. We're exploration. We're going to develop these assets along these discoveries along. We are going to make more discoveries. We are going to, but it's a kind of very long road you're describing, right? So you got a bunch of money now. You are going to burn through that. That's the name. That's what you got to do. You got to spend it, drill, etc. But we're going to keep coming to market and raise capital. Do you think that's a sort of a sustainable model in this space? Is there a longer term game here, which is, someone will take us out? I mean, or do you get this thing over the line? You a lot of ex-Cameco guys and people who've not just made discoveries, but been involved with production. So where are you coming at it from?
It's an interesting question with a bit of a nuanced answer, I think, right? And I'll address the first part of it first, and that is, the ability to explore and then continue to raise capital and continue to explore, and that comes down to, in our view, deploying risk capital appropriately, and that's the business we're in. Exploration is a business. My primary job is how do we deploy risk capital intelligently in a value accretive way. Okay, and that's where we're looking at investing along that exploration risk curve, investing more heavily in our mature assets, and then more disciplined as it relates to the generative stage assets. And in a market like this, that becomes value accretive for shareholders, right? And so it's looking for a return on that investment as we put it into the ground. And then in terms of how this thing goes over time, uranium is one of those unique, you mentioned it's a bit of a unique smaller market, and it truly is, right? But you look at the incredible amount of value accretion that companies have in this sector. I spent a lot of years at NextGen Energy. They have, in my mind, what is globally a top tier asset globally amongst any commodity, right? But they went from discovery through to where they're at right now, and I think if you back the cash out, have accrued over $4 billion in enterprise value for shareholders. Okay, and so the opportunity in the uranium space to go from discovery through to advanced stage, development stage projects, and with the potential to go into production, is a real path in the uranium space, probably more so than it is in other commodities. But with that being said, it's at every stage you step back, you assess, and you make decisions that are in the best interest of your shareholders. And so it's a bit of a nuanced answer, and it's not intended to be
I hear you.
But it does go multiple directions, and you can't. I think it's flawed to sit at this stage and say we have one particular model or another one.
Yeah, okay, I hear you, but I got to ask the question. So, in effect, but I think if you look at sort of Cameco back in the day, first mover. And there were different times. I mean, it kind of feels like a very different market now, and different sets of conditions precedent on companies, and it was the way they behaved, the way they advanced, and I'm not talking about just pure admin, but I'm also talking about the timeframes which they've got to get used to, and the way that they go about building their companies as well. So, do you think that's an inhibitor, or for companies who have genuine intent, that's not going to be an issue?
Yeah, I think it's a big opportunity. Quite frankly, I think it's a tremendous opportunity in this market. I think it has changed, and I think the long-term outlook in the uranium space right now is, again, I think the fundamentals are stronger than I've ever seen them, right? And as a function of that, the ability to take advantage of the position we're in right now, continue to grow, continue to build up our asset base, and continue to build a company around that sorry, I just had a call come in there.
Investors.
Yeah, exactly.
Unbelievable. More money.
Yeah. No. hey, the platform that we built up is directly in line with the strategy that we're deploying. We have the intention of being a real player in this cycle in the uranium space. I guess it's a short story.
Okay. And do you think it, obviously we need to find, where was it, incentive price most companies talk about, and that incentive price seems to change on a daily basis. It's getting higher and higher. Maybe it's stopping incentive price more. It's that moving into kind of greed. Say, well, how much more can we get if we delay production? If we delay talk of production, maybe the price will move and drive to unseen levels, and maybe that's what the driver is. But do you think, therefore, all companies will ultimately succeed because the price in terms of that supply demand gap and all of those drivers is going to allow all companies to be able to do what they want to do? Again, partly because the market's such a small space, but also because the demand is so huge coming forward.
Yeah, I think to a certain extent, a rising commodity price will positively impact the sector in general, right? But there will be different degrees of success within that scenario, and I believe companies that are intending to do real things with a commodity price increase and deploy dollars in a real way to advance projects within the cycle will obviously have more success than companies that aren't set up and positioned that way.
That's interesting. Can I flip that? Okay, are you also saying that perhaps not all companies, despite whatever the price is, are destined to succeed?
Well, yeah. I guess that comes down to the definition of success, right? But no, certainly.
Well, get into production should be the answer to definition of success. But obviously, we're going to be talking about, it's public markets, so growth in that sense is success to many people. But for me, it's will all companies get into production, be able to produce? Or there'll be other factors at work, such as lack of skill and experience of people to be able to do so.
Absolutely. Skill experience is a material and major factor. It obviously stems off an asset base, right? And just because you have an asset base doesn't mean that you have the ability to move things forward in a material way. We're a team that's fortunate in that we have both capital market strength and technical strength. The capital market strength, I think, is self-evident in the fact that we've been able to raise the capital we have to date, and our ability to do so moving forward, I believe, is really strong. From a technical perspective, I've had the opportunity to work kind of integrated through the space, from early stage exploration right through to producing assets, right through to development stage projects, et cetera. And I know the space very well, as does our team. And so our ability then to move assets forward in a material way in the cycle is something that we're focused on.
Right. Okay. And then I'll kind of wrap it up now, because I know you've got places to be. But if I look at you've got a great valuation for how new you are. So obviously people like the plan. With regards to that, kind of, if you don't mind looking at the shareholder register and even the kind of corporate side of the business, who are the people who are in this? What is it? What should that tell us about their belief in your ability to kind of move this forward?
Yeah. So we look at ATHA on let's say on listing. Okay. Raising the capital that we raised up until that point, we raised $33 million, 33.7 at a dollar. That was done across 8 names, as across 2 family offices and 6 institutions. Then going into the capital raise that we did concurrently with the announcement of the proposed acquisitions, that was backstopped by ATHA Energy and MEG Energy, two significantly experienced names in the uranium space, both of whom I have a tremendous amount of respect for. And then coming up to the flow-through portion of that raise, it was done across 3 names. And three names that you would want on your register. And so, the people that are involved in the story, the people that have been investing in the company to date, are serious about the uranium space. They're serious investors, and we're fortunate. We're fortunate to have them on our registry, and I believe it sets us up extremely well moving forward.
Well, Troy, that's a nice first pass at what you're doing and why you've done it. So appreciate time today. we'll hopefully speak again soon. And, like I say, do stay in touch with us, okay?
Absolutely. I appreciate the opportunity, Matt.